Mortgage Matters is coming to you live from the Cumming City Center today, the new downtown Cumming City Center behind the amphitheater and right in front of this beautiful natural area. And there's Colleen. Hope you enjoy the episode.
On today's edition of Mortgage Matters, we're going to be talking about what the loan process looks like. And in fact, we're going to give you such a good look. We're going to role play what that looks like when I call a mortgage broker and I'm looking for a home. I need to find out my budget, but I have to start with the mortgage loan originator to find that budget and to find what the products are out there that'll suit my needs, get me in the payment position that I'd like to be in, and what kind of cash I need to have on hand to get through the transaction. And we'll talk about it after that.
So one thing I want to try to remember is that this is not a scary process. So no matter how much it may look like we're sweating today,
it's a little warm out there.
There's no need for you to sweat. It's so hot. Let's do this thing. Okay. So yeah, I'll get a referral from an agent and they'll say they're calling you later on today, or could you give them a call, please? And it usually goes something like this.
So I'm going to be Joanne Buyer. Ring, ring.
Good afternoon. This is Matt.
Hi, Matt. I was referred by my real estate agent, Colleen Ledford, and she wanted me to talk to you before I go out and look for homes and try and get my budget right. Can you help me with that?
Well, first of all, let me just say that you're in the right place. Colleen is fantastic.
Thanks, Matt.
Don't always say it. Well, congratulations. First of all, it's a big step. Just even, being interested in purchasing a home, and I'm assuming that you've kind of done a little bit of research and kind of getting ready.
A little bit, but math and finances aren't my strong suit, so it's kind of a scary process for me. But Colleen told me that it's really just a conversation.
It's very simple. So yeah, the initial conversation that we're going to have right now is just to kind of give you a chance to ask any questions that you may have already, and just to kind of let you know the process. It is a very simple process. It's just a case of gathering information, and we do that in a loan application, which I send you a link for. So there's nothing, I'm not going to grill you on a ton of stuff now. You can fill that in at your leisure.
Do I need to have like certain kinds of paperwork or documents, easily accessible to be able to fill in the blanks and give you that information?
Only if you don't know your basic information off the top of your head.
Okay.
Like, how much do you make each year? Are you hourly? Exactly how much do you make each hour? Do you work a minimum of 40 hours a week, or do you have a minimum? Those kinds of things. But other than that, I mean, it's typically general knowledge.
So really
stuff.
standard and basic questions of everyday knowledge
Name,
that you have,
address.
Even without like drilled down into your finances.
Right.
Right. Okay.
No. It's going to be,
So
how
an
much
easy
do you
start.
have in checking, savings, 401k, that kind of stuff. Address, date of birth, social security number.
I hope you know those.
Income, where you work, how long you've worked there, and those types of things. But anyway, yeah. So the initial conversation, I'm going to say, hey, so do you have any idea of what kind of price range you're interested in shopping in?
Well, I know what I like, but I know what the reality is probably a lot different.
Okay.
And I know with my budget, what I think, I'm probably in the 350 to 450 range.
Okay, perfect. So
I do like the ones at 700 and over, but I can't afford that. So if I could find a smaller version of some of those beautiful homes, I think that'd be good.
Trust me, if it's double your budget, you wouldn't like it for long.
Yeah.
Yeah, you wouldn't like it for long. I'm being attacked. Okay, so look, basically our conversation today is just an opportunity to kind of meet each other and become comfortable. I'm going to send you a loan application link and have you fill it out. And that's really the best place for us to start. A good solid file should be built on a good solid foundation. So we need to get the information. It's not very exciting, I'm afraid, but yeah, just fill in a loan application and get it back to me. The most important thing that I want you to remember moving forward is that I'm available 24/7. I may not pick up the phone 24/7, but I'll get back to you as soon as I can. And I want you to reach out to me with questions, text, call, email, any time of the day or night, because I don't want you losing sleep on a Saturday night just because you think I'm 9 to 5 Monday through Friday. If you've got a question or a concern, go ahead and address it right there and then. I'll get back to you as soon as possible.
My real estate agent said the same thing, so I appreciate that. I guess you guys do work on the weekends, huh?
We are a little bit on the same page.
Yeah.
Yeah.
And I will just say, side note, he is an excellent communicator. He is so rapid fire with communication back. It's such a pleasure, and he gets you to the closing table on time. Just side note, just had to brag a little bit on my
Well, I
mortgage
appreciate
partner.
it. Same.
Anyways, moving on. So let me ask you, Matt, I give you all of my information and you go through it. What do I end up with that's tangible? Do I get a yes or no, other whether I qualify for a mortgage at all? Do I get a pre-approval of a certain amount so that I can start my search? Or what, after we go through this initial loan application, what is the next step in the process that gets me closer to being in that home?
It's a great question. And it's a very simple answer. It depends. Right? So it depends on what the loan application looks like. There are obviously 1,000 different types of borrower. There are those that don't qualify. You know, they've got a 368 credit score.
They just got to keep on working at it.
They got to keep working on it. And if ever I have or I'm referred borrowers, our borrowers that don't qualify based on credit, I'll have a plan to be able to put in place to help those folks improve their credit. Unfortunately, the only way to really improve credit quickly is often just throw a ton of money at it, which isn't always an option. You know, paying off debt and paying off a couple of small collections that you invariably didn't know you had. Or, you know, other than that, you know, it's kind of time over time, right?
And I think a lot of times, you know, when you're looking at first-time homeowners, excuse me so much, you're looking at people that haven't accumulated a lot of credit.
Right.
They haven't, you know, been able to sign a contract long enough to have those credit cards or whatever it is that they've enhanced their credit with to really take a hold, because you've got to have longevity there.
Yeah,
with
longevity
accounts that
is
are open.
definitely a part of the score. So, yeah. So anyway, so you know, depending on what happens, let's pretend they're a vanilla buyer. You're a vanilla buyer. You're a 700 credit score with $40,000 saved up. You're looking to shop in the 350 range, and you have a normal salaried income. So there's different income types. Depending on the income type, I would ask for follow-up documentation.
Yeah.
If you say you make $190,000 a
We need
year
to see it.
as an hourly manager at Publix,
We need to see that.
I'm gonna say, okay, well, just shoot me your last 2 W-2s and your 2 most recent pay stubs.
Yeah, we had actually spoken a bit about some of the documents and things that we would need in a previous episode. So you can always refer back to our prior episodes if we're skipping ahead a little bit here.
Yeah, absolutely. So so that's basically it. And then once I get the file, I'm gonna pull credit. A lot of times what I'm doing now is just a soft pull, because it gives us the accurate score, and it populates the liabilities.
What that means is it's not a hard check on your credit where it shows up and could actually affect your score.
Yeah.
A soft pull doesn't affect the score.
Soft pull doesn't affect your score. It doesn't. A hard pull doesn't affect it a terrible amount
Unless you have a lot of them.
Yeah. Well, and that's another thing. So great point. On credit report pulls now, in 2008, the laws were changed after the big crash. And part of that was to make it more competitive, because competition drives down rates and prices and fees and all those types of things. And it drives up quality of product and quality of service. So it was designed to create competition, to kind of help self-regulate the industry a little bit. So you can actually have multiple credit pulls only count as one now within a certain period of time.
It used to be a big dinger.
Yeah.
If you had too many.
Yeah. So, and it's not going to affect it too much. It is necessary to obviously submit a file and get into underwriting and do that kind of stuff.
Absolutely.
So we wait and do that on the back end now. But that credit pull is going to populate credit score, your mid score. So the way credit scores work is there are 3 credit reporting agencies: TransUnion, Equifax, and Experian. Every lender in the country works the same way. We take the middle score. If you've got a 650, a 700, and a 750, which sometimes you see that wide of a range because they all work differently. And I think it's intended to make sure nobody understands how it works. Then we just take the middle one, 700, and that's your credit score for buying a house. The car credit score is a little bit different. So people often come to me and say, hey, my credit score is an 873. And I'm like, not this one.
No.
Credit ranges from 300 to 850 on Experian, Equifax, and TransUnion. So we have changed locations for the only reason, just to give you a better look, a little different look at Cumming City Center. I may be a white-skinned, red-headed English boy, and it was a Trust me.
That's pretty brutal for him.
Sitting on a metal black bench was awesome out there in the sun. It was unbelievable.
He's
Anyway,
crying.
no, it wasn't crying. It was sweat. It was sweat, not tears. So anyway, we finished talking about credit score.
Yeah.
And then, we collect the information. So we've got income. We've got your income is calculated in gross monthly income. So if you're salaried at $60,000 a year and you take, $2,300 home every 2 weeks after taxes and everything, that's not your income. Your monthly income is $5,000 gross income, 60 divided by 12.
Yeah.
For those of you that don't have time to take your shoes off. We've got income, we've got credit score, we've got reserves, meaning mattress money, checking, savings, 401k. We can't use money that's cash. It has to be traceable, seasoned, and sourceable, right?
So that means it has to be in the account for 2 months, showing where it came from.
Yeah, it actually, it can be in there longer than 2 months, but we're going to collect 2 months of bank statements, and it has to be there the whole time. Otherwise, we need a letter of explanation as to where it came from and potential, tracking documentation. We want to make sure that you're not getting a loan in order to get your loan, because, the rules have become very, very strict since 2008, and a lot of people don't like that. But it's designed to try to avoid another 2008, right?
Really
So
is.
if you're in the buying process and it seems a bit detailed and frustrating sometimes, it is for the protection of the housing industry.
It's one of the most heavily regulated industries that there is. Finance, housing, two of the most heavily regulated industries, and it is to protect the consumer. It's
your
to
investment.
protect you
Yep.
and your wallet and your money. And believe it or not, we're on that team too. We want to protect your money and your wallet and give you the best deal and get you the best house for the least amount.
Yeah. So once we look at all that stuff, there's something called a debt to income ratio, which we've touched on in the past. That's going to be the amount of debt you have each month, credit card minimum payments, car payment, student loans, whatever the case may be, versus what you make on income. So if you were at $60,000 a month, your income is $5,000 gross. Let's say you have a $250 car payment and credit card minimum payments totaling $50. You've got $300. Mm-hmm. You can borrow with a conventional loan. Your debt to income ratio can't go over 50. So technically up to $2,500. You're already using $300.
Right.
So you've got about $2,200 to play with, which unfortunately, Colleen, is not going to get you that $450,000 house right now with the way rates are.
Right.
But that's part of the process, right? We look at the information and then we kind of.
But it might get me in the 350.
Absolutely. Well, it may. Yeah, it may.
Right?
It may. Yeah.
So,
but I mean, we'd have to run the numbers. Don't forget, you're going to have, if you're in 350 and you're first time home buyer, you may be putting down 5%.
Right.
Okay. So you're putting down about $16,000 ish at 350, a little bit more. But if you're putting that down, your loan is going to be 95% of the sales price.
Right.
Okay, so your loan is going to be 340, 355 or whatever. And with the interest rates the way they are, that principal and interest payment is going to be $1,600, $1,700, $1,800, $1,900 right out of the gate. So actually, it's going to be more than that. It's going to be closer to $2,200. I don't usually do it in my head because I got
you're doing great.
Computers to do it for me. So then you're going to have to add monthly taxes and homeowners insurance on top of that. So
and mortgage insurance.
And mortgage insurance, of course. Yes. So it's going to be close.
Oh, and I did want to clarify something. When they're looking at your bills, when you think of your bills, you're thinking of your electric and your credit cards, your car payment, your how much you spend on groceries. They're not going to ask you how much you spend on groceries. It's contractual obligation, financial obligations that they look at. Contractual meaning I signed up for this credit card. I'm in a contract with this credit card company.
Yeah.
So that's what they're pulling. And so when we say budget, we don't mean your groceries and how much gas you put in your car. And,
that's why the debt to income ratio is set at 50.
Right.
So there's money left over for those things.
Just wanted to clarify that for some who I think we maybe, we're used to the jargon and used to kind of the parameters, but definitely wanted to clarify that for some that are still getting used to some of the words in the industry and some of what, when we say budget, it's not like your kitchen table budget, it's your contractual budget.
Absolutely.
So
stuff that's going to pop up on credit, debts.
Yeah,
that
just
are owed.
wanted to differentiate that.
And the reason your cell phone is not a debt, even though it is a monthly payment that you have to pay every month, there are people that own houses that don't have cell phones.
That's right.
You can get rid of it if you want to qualify for your home.
That's right.
Who wants to do that? What on earth would we film Mortgage Matters on if we didn't have a cell phone? So we take that ratio and we figure out your budget, if you qualify, how much you qualify for, and you know, we know that, hey, Colleen, $350,000 is 50% debt to income ratio. We might want to shop in the 345 range in case we have to negotiate up to 350 or even, you know, the 335 range, and negotiate up to 345 and come in a little under to be safe, because guidelines change constantly.
And this is another reason, like what Matt is saying, I know obviously we talk about mortgages, but when you have a really good real estate agent and they're able to negotiate for you with based on facts and you know, the things that make for great negotiators, this is exactly why we have such a good relationship with our mortgage lenders, because they help us help you get that deal done and get you in that home. And it's the nuances, the little things like that he'll say, yeah, I can get them bought up to 350, but we need to play it down a little bit because there might be some unforeseen things coming up. And when we have that kind of clear communication, it just protects you in the end.
Yeah, maybe it's a first-time home buyer that has a little bit of additional saved money, which often happens, and they say, hey, I want to shop up to 360. You can put down a little bit more down payment to get that number down. You can buy down your rate, which helps your principal and interest payment, or the interest part of the principal and interest, and that can continue to sneak that number down to the debt to income ratio so that you qualify.
And we have spoken before about, you know, family and friends are able to gift you some money at that point in the transaction to buy down those mortgage points.
Yeah, and that's something that, you know, if we're close, and I'm over there racking my brains trying to figure out how can we get qualified here.
In that house,
do you have a family member or a good family friend that can gift you money towards closing costs or down payment? And yeah, we can accept up to 100%. Now, that person may have to show 2 months of their bank statement too to make sure that they're not borrowing money to give you money for your loan. So we have to make sure that we close the circle on all of that. But yeah, at that point, I would say, Colleen, you're qualified up to $345,000. Congratulations. I'm going to let your agent know.
Yeah.
Oh, I'm sorry. I think you were Joanne Homebuyer
I am.
or something. Yeah, I'm going to let
Joanne
Colleen.
Buyer, thank you.
I'm going to let, yes, middle name Home. I'm going to let your agent Colleen know, and you guys are ready to go shopping. Jump on Zillow.
And the great thing about when we get to that point, you'll be, if we want to make an offer, you have to put in proof of funds when you put in an offer on a home. So it's really important to have that, to be able to say, hey, Matt, we're gonna try and put a deal together. I need a pre-approval letter. And he'll pop it right over to me, and we write your offer and hopefully get you in that home with the right negotiation and the right mortgage, and make your home owning dreams come true. And therefore you just start right there building your own personal wealth with paying off your mortgage and gaining that equity, and you can leverage that in the future. And it's the start of a really great financial journey to go on.
Yeah, absolutely.
And it doesn't have to be scary. I know it sounds like it because there's words that we don't use normally, or words that are different. Maybe you don't even know what they mean, and people throw them around very easily, and that can be intimidating. We don't want to do that. We want to break this all down into the smallest bites possible, because sometimes that's what it takes to get over those fears.
Listen, I promise, if you're a manager at a Publix, or you work on cars for a living, or you
hairdresser,
you're a hairdresser, or you install electrical systems, I'm going to come to your work and be completely lost also.
That's right.
It's nothing to be embarrassed about. The flip side of what Colleen said is, if you don't qualify, or you don't qualify for as much house as you want to live in, we're going to give you a clear, concise plan.
Okay.
So the flip side of what you said is, if you don't qualify for whatever reason, you don't qualify for as much house as you'd like to buy, or you don't qualify at all, We're going to give you a clear, concise plan of what you need to do in order to get to the point that you want to get at. And that may take a little time, but
it's worth the patience and the effort.
Definitely worth the patience.
That I can promise you.
Yep.
And we will continue to follow up. If we're in that relationship, we've already started that relationship with you, we're going to call you once a month and say, hey, did you make any dents in the debt? You know, which means to us that the debt to income ratio has shifted, which means that your qualifications have shifted.
Right.
So it's encouraging, and we want to encourage you to keep giving us encouraging news that we're getting closer to getting you in that home and creating that wealth. So that's going to do it for this edition of Mortgage Matters, and I hope that you're encouraged to give Matt a call immediately and see where you are in the home buying process and what steps you can take to get you there if you're not. We would love to work with you, and we'd love to answer any questions that this video may have cropped up for you. Reach out to us. Our information is below. And as always, hit the like, share, and subscribe button and send it out to all your friends.
So from Cumming City Center, this is the most recent episode of Mortgage Matters.